Carl, what is your outlook on the fund for 2026?
Sure. So first and foremost, I mean, we're invested in credit. Corporate bonds is a big proportion of the fund. So fundamentally, we look at economic growth, obviously accommodation coming from central banks could ultimately lead to lower income outcomes down the line, but that's also pretty good stimulus overall for economies. Economic growth is by no means 3, 4, 5%, but there's enough economic growth out there in kind of the way we're looking forward to the next 12 months that it's certainly a good situation for high quality companies, right? We don't need a lot of economic growth overall. We think companies and bank balance sheets are very strong. There's certainly a lot of liquidity. So in terms of technicals, there's certainly a fair amount of demand for corporate bonds as well. So we feel pretty good about being kind of a corporate investor in this type of environment. Obviously, there's been a lot of focus on the central banks. As we mentioned, despite the fact that we've already seen, part of this easing cycle begin, we're still very confident with the distribution rate of 6%. And we're looking forward to that at least through the first quarter of there not being a change there overall. When we think about Fed funds expectations, the market is expecting another 50 basis points of cuts this year. That's not 100% given, but we think it's a reasonable expectation. But again, there will not be any impact to the, in a major way to the price of the fund, but the expectation would be over time that the income may come down, but we're still going to be producing, pretty good income overall moving forward.
I would say these are 3 points. The first one is Allianz Global floating rate notes aims to offer a high quality source of income and relative stability by avoiding interest rate induced volatility. The second point that's come out from me is we have a diversified portfolio of securities selected based on fundamental research that generally yields higher than cash, and it is our ambition to generate alpha through credit selection. And the third point that I think has come out is floating rate notes can be a diversifier in a portfolio thanks to their low correlation with other asset classes. And if we take these 3 attributes together, we actually believe that Allianz Global Floating Rate Notes Plus can be more than just a tactical instrument. It can be a sensible allocation regardless of market conditions. We thank you for your attention, and thank you, Carl, for being with us.